Rescue talks with Thomas Cook have failed, and now hundreds of thousands of travelers are stranded following the collapse of the travel company, Thomas Cook. Joining us from London with the latest is Ken Odeluga. He's a market analyst at Citi Index. Ken, great to have you with us. I don't recall ever reading about a story similar to what we're reading now about Thomas Cook. It's being called the largest repatriation of British citizens from abroad in the country's peacetime history. It all has to do with the collapse of a big travel company and a company that all of us know, at least in general terms, Thomas Cook. Tell us a little bit more about what's happening.
Well, yes, this is the culmination of a number of years of difficulty for Thomas Cook, the 178-year-old travel firm. It's now or at least at the end of its existence as we knew it, a £53 million enterprise in terms of market value. That equates to or compares to something like, 10 billion, at its height, just maybe 5 or 6 years ago. The main reason, I think, of course, is the changing sort of appetites in terms of taste for holidays, the geopolitical impact of terrorist incidents and that sort of thing, and of course a huge amount of debt that the company has been holding on its books for a number of years in multi-billion pounds worth. So the knock-on effect of all of those things in combination have brought us to this somewhat unfortunate day.
Why was a deal with creditors not possible? That certainly raises the prospect that some of those creditors will get nothing or very little where they might have received more under a deal with the company.
It's complicated, Paul. So on the one hand, it appeared that they had managed to secure a rescue deal, a buyout deal with its majority owner, the Chinese conglomerate Fosun. And this was agreed a number of weeks ago, in fact. And I think what the final straw appeared to be news of an additional demand by the company just in recent days of around about £200 million, apparently to cover the time between now and the end of the year. And, the investor, or the would-be investor, appears to have balked at that final demand. And additionally, on top of that, there was some pushback from investors in the credit default swap who had signaled that they were going to, cry foul if, any sort of unusual bailout happened. So all of these things together kind of pretty much sealed Thomas Cook's fate.
Ken, we're seeing this morning a lot of weakness in continental markets, particularly the DAX getting hammered for, I guess, more than 1% loss. And there's the flash PMI numbers are out this morning. Can you tell us a little bit about what's happening in the manufacturing sector in Europe?
Yes, I mean, hi there. This is some terrible data that we've had this morning. I think it's something like a 6-year low, or the fastest pace of decline in 6 years for the German PMI. I think it was something like 41. And if you can, of course, consider the fact that the dividing line between growth and contraction for these instruments, the PMI instruments, is 50, then we are well below that dividing line. And clearly, what that data is telling you is that the broad sector of manufacturing is declining, is contracting. So, and this comes of a bit of a surprise, given that there was some perhaps tertiary type data in recent weeks, which had begun to suggest that not just Europe, but perhaps other places around the world had perhaps began to see a bottom in terms of the declining growth. And this is a bit of a wake-up call, and I think that's why you're seeing the extent of the falls in stock markets that we're seeing.
What can you tell us about the European financials and how they are trading today?
Yes, I mean, we see that the European financials are the weakest sector. They certainly were when I last checked a short while ago, dragged down by bank stocks as usual. Now, it's complicated with the financials, of course. Clearly, weakening growth and signs of weakening growth do not play well for the financial sector. And I think possibly in the back of the mind of investors in this sector is that, of course, given the fact that we've got confirmed, we're on the confirmed path of a slowdown. The European Central Bank really has been given the green light to go full steam ahead with its stimulus policies, which generally are not positive for banks because of course of the impact on net interest income, which these policies tend to diminish. So bad for growth and bad for on the monetary side as well for banks. That's why they're falling so hard.
And lastly and briefly, ArcelorMittal, a big steel maker, down about 6%, I believe, in today's trading. Is that a judgment by investors on concerns about the pace of global economic growth?
Well, I think it is. And also, additionally, I think there's a little bit of now anxiety coming in about this trade situation, or coming back in. I mean, it's constantly been on the back burner, of course, but we've progressed pretty much. We haven't made any progress at all over the course of the whole summer in terms of the trade talks piece. We've had little glimmers of light, but here we are towards the end of September, and we are none the wiser as to whether or not the beginnings of a rapprochement are possible. We do have those talks set for October, but I think everyone's pretty much aware that there will be no significant breakthrough in these talks. So essentially, we're looking at really between now and the end of the year for a turnaround, and there's really no sign of that. And that's what I think the mining stocks and the large steel companies like ArcelorMittal are reacting to.
Ken Odeluga, thank you as always. He's a market analyst at City Index in London.